Good morning. How are you guys doing this week? I hope everybody's doing well, and I want to do a shout out to kind of all of our friends around the country that are affected by this crazy weather we've had this week. I'm kind of embarrassed to say that we live in sunny, beautiful Florida, and the weather this week has been mostly really nice, and so I feel bad for our friends in Texas and going really all the way up to the Northeast. So hopefully you guys are doing all right and getting by okay. And for those of you that are accountants and CPAs, you're kind of getting right into your busy season with tax season. And what more do we have to deal with but PPP and employee retention credit issues and whatnot. So I'm going to be coming to you weekly, probably going to try to continue to do this maybe throughout the month of March. We're going to send out invites for future bookings so you can register. If you do register and you can't attend a webinar, don't worry about it. You'll still should get an email with the webinar link and the attachments or the handouts, so you can really watch them anytime you want. We just seem to do better if we record these. Like today, I'm recording this on a Thursday, but you'll be watching it on Wednesday, and that seems to work best for us. Again, keep sending me emails. I need to apologize to some of you because I received so many emails from last Saturday's webinar. I still haven't gotten to all of them. I'm trying to set aside a little bit of time every day to address them and do some research to handle some of the questions. So keep the questions coming. If you didn't get a response to an email, give me a little more time and I'll be trying to respond to all of those. But this week, we're going to actually turn our focus a little bit away from employee retention credit. I'm certainly not ignoring the employee retention credit. As a matter of fact, next week, we might turn our focus back to the employee retention credit and talk maybe more about the 2021 credit, because I'm getting a lot of questions about it too. It's a different animal than the 2020 credit. So we'll probably do next Saturdays on that, depending on the guidance that we get issued from IRS and SBA. Much of what we do is driven by what new information we get. And for most of you, if you're staying tuned to what the IRS is publishing and what the SBA is publishing, you'll find that things have been moving a little bit slowly, and we haven't been getting quite as much guidance as we thought we would. And that's something I'm going to actually address today specifically. But each week we do kind of keep our ear to the rail to see what's being published and what new information is out there, what new interpretations there are, what new guidance there is, and we provide it as good as we can, as quickly as we can. So we're going to continue to do that. But we're going to focus on, we're going to revisit PPP forgiveness. And the reason why we're going to revisit PPP forgiveness is because of the fact that we really have new information. Now, I'm happy to say that the PPP forgiveness calculator that we published a long time ago now, I can't believe how long ago it was, has been continually updated. It is up to date for the current guidance that has been issued from the SBA on the FAQ, on the IFRs. So it's current and up to date as far as that's concerned. You can still get it at pppxl.com. So I'm happy about that. If you purchased it before, you don't buy it again, even though we're on version 2.0 now. We decided just to make it such that every time we did an update, it automatically uploaded, and if you bought it, you can automatically download it. So that's a good thing. And one last other plug for the Employee Retention Credit Guide. It is still, as far as I'm concerned, the best single source for ERC guidance and ERC resources. So if you haven't got it and you're dealing with employee retention credit issues, please get it, because it's definitely worth the little cost that it is. It's really a good, valuable resource. And we'll probably be talking to Alan's group about expanding on that a little bit as we get more guidance on that. So let's talk about PPP forgiveness. Now, if you've had your loan forgiven and you are going for round 2, you're going to want to pay attention to this. If you haven't had either your first loan forgiven and or you're going to apply for round 2, you want to definitely listen to this. Right now, where we're at, I want to kind of give you a timeline of where we're at. On January 6th, the SBA issued 2 new interim final rules. That's what IFR stands for. They were in response to the PPP loan program as amended by the Economic Aid Act, which was signed by the President on December 27th. And then the other IFRs was a separate set of IFRs on the PPP second draw loans that focus strictly on the second draw loan. And then we kind of laid low for a little while, and then in February, the SBA issued IFRs on the loan forgiveness requirements and the loan review procedures. In the PowerPoint slideshow I have here, there is a hyperlink that you can click on to go directly to the IFRs and read them yourself. 62 pages long. It's not a difficult read, but it is there for you to definitely take a look at. Now, where do we go from there as far as guidance? There's where it gets a little murky, because the last set of frequently asked questions we got from the SBA, FAQs is what they're called, and those FAQs, by the way, were good. Every time we got some, it really gave us more insight. Very rarely did it create more questions, but sometimes it did. But more often than not, it answered questions as opposed to creating questions. But the dilemma we have right now is that as of yesterday, we didn't have new FAQs. We still had the old FAQs, which were last updated on October 13th, 2020. And the problem with that is that those FAQs address things that don't even exist any longer. For example, they talk about the alternative payroll covered period. And those of you that have been paying attention to the PPP program and the forgiveness know about the fact that we had this covered period, and then the SBA created this alternative payroll covered period to allow borrowers to line up their covered period for payroll purposes only for periods that aligned with their payroll. That's gone. That's been completely eliminated. So if you're still working under the thought that you're using the alternative payroll covered period, you got to throw that out the door, because we don't have it any longer. It's been eliminated. So because of that, we are kind of like in a situation where really all we have is the current IFRs that were issued, and most of those were really a restatement of existing regulatory provisions with some new provisions, and we're going to go over both some of the new ones. We're going to pretty much go over all the new ones and some of the old ones as well. Now, what's interesting is that the IFR specifically states, it's like in the first or third page, second, third, or fourth page, it states that the new IFRs do not apply to loans that were forgiven prior to December 27th. So what that means is that if your loan was previously forgiven and the rules have changed, you're not going to be able to go back and amend that forgiveness for that purpose. You might be able to amend it for another reason, like the ERC, the Employee Retention Credit, like I talked about last week. Again, we still don't know how to amend a PPP forgiveness application. A couple of the banks and lenders I've spoken to have told me they don't know how yet, so we're still kind of waiting in limbo as far as that's concerned. But if your loan was previously forgiven, it's a done deal. These IFRs technically don't apply to you. So just keep that in mind for anybody that's in that situation. Maybe you've got an old PPP loan and now you have a new PPP loan. Technically, you're really applying two different sets of rules for those loans if the old one was already forgiven. The IFR also affirms that there are 6 provisions in the IFRs that relate to PPP forgiveness that were not in the original law. They were set up or created by the Treasury and SBA, or the Treasury alone. And I think it's important that we remember that they have these 6 provisions. And what's important about it, I think particularly, is it goes to the point that the SBA, the Treasury, can kind of change the rules, if you will, based on their interpretation of the law and what they feel is, kind of best to administer the PPP loan program. The good news is that all the changes they made were actually pretty much in our favor. So thank you, Treasury, for that. And so just real quickly, here they are here. It's the additional reference period they created for seasonal employers. The rest of them are de minimis exemptions for the rehire of employees. Remember, if you offer to rehire an employee that was furloughed or temporarily let go or terminated, and they don't come back, they refuse to rehire, that's one of the exceptions you have for the FTE calculation. There's another one for employees that are terminated for cause. That wasn't in the original law. There is the rule that says if you do have FTE reductions, that you eliminate by December 31st, or the last day of your covered period for any PPP loans made after December 27th, 2020, then you don't have to worry about any FTE reduction penalties. So that's kind of a nice one that they provided to us. And then the last two are really big Christmas gifts. If your PPP loan is $50,000 or less, you're completely exempt from the FTE reduction penalty. You're completely exempt from the wage and salary pay rate reduction penalty. So I still get some emails from people who have smaller PPP loans that tell me that they weren't able to hire back enough employees, but they were able to spend all of the money within that 24-week covered period on the employees they had. They're fine. They do not have a FTE reduction penalty because they got a free pass from the SBA, so to speak. Now, they still need to spend the money on qualified expenses. They can't just pocket the money. I don't think the SBA would like that too much, but they certainly gave them, not really off the hook, but gave them a lot of leverage to use the money and to maximize the use of the money for what best suits them. I did field a lot of phone calls, not so much recently, but early on, where people were actually bringing employees back on the payroll that physically couldn't even work in the business. The business might have been shut down, and we all know that really is not a good idea, but a lot of businesses did do it because they felt compelled to spend all that PPP money right away. If you remember, originally we only had 8 weeks to spend it, so we had a lot of businesses that were borrowing the money and immediately rehiring the employees, and then the employees weren't even able to come to work. So we, hindsight being 2020, we know we could have done things a little bit different as far as that's concerned. So getting into a closer look of the IFRs now that were published in February, we know that the payroll cost, there's really not a lot of significant changes in the prior guidance, except now they do emphasize that the employee benefits, the health benefits, if you remember, they always referred to that as like health insurance. Now we know that it's benefits paid by the employer for group health, life, disability, vision, and dental insurance. They are the premiums that are paid by the borrower. So if you have a group health insurance plan in which your employees contribute, say 50% to the cost, you can only deduct 50% or include 50% as your share as the employer. You can't include 100%. So that's an example there. They also confirm that payroll costs that are qualified wages taken into account for the ERC are not eligible to be eligible for the loan forgiveness as well. Now, we talked about that last week at length, and we all know that where those waters really seem to be getting muddy is, well, what if I have wages in my covered period that I want to use for the ERC? Am I allowed to use them? And right now, our interpretation is that you can, and technically maybe you should, because the rule is that you're supposed to apply for the ERC first, then apply wages to the PPP unless you elect otherwise. But in all the guidance that we have, there's nothing that tells us that we have to use all of the payroll in our covered period for the PPP forgiveness. All it says is that those wages paid or incurred during that covered period are eligible to be used for PPP loan forgiveness. And I think that's a really important emphasis to put on there, is that until we get further guidance on this, maybe from the IRS and or SBA, I think it would particularly come from the IRS, I'm kind of inclined to tell you that I think you can use wages that are paid within the covered period for the employee retention credit, so long as you still have enough wages in the covered period to apply towards the PPP loan forgiveness. Keep that in mind, because that piece of advice could change depending on what our friends at the IRS tell us eventually. Now, on non-payroll costs for the loan forgiveness, not really any major changes there. They did give us some guidance on the the interest payments that you can use on business loans and for real and personal property, business rental payments for both real and personal property, and utility payments. We've got really clear guidance now on the fact that transportation is not a utility payment for things like a company car, but it is for transportation of utility items or transportation taxes that are applied to, say, a gas bill or something along those lines. Now, the new law, the Economic Aid Act, which is all part of that giant appropriations, Consolidated Appropriations Act that was passed or was made law on December 27th, 2020. thousands, 5,600 pages. The Economic Aid Act is within that. That's where we finally got these 4 additional non-payroll costs that can be used for PPP loan forgiveness. Now, folks, here's where we kind of get a little bit into a little bit of trouble because we don't have a whole lot of guidance on these 4 yet. The covered operations expenditures focuses a lot on things like cloud computing and probably like internet access for employees that are working remotely and changing in your computer systems. Maybe you had to buy equipment for remote workers or to expand your remote access for cloud computing. That's kind of the example they gave there. Covered property damages, damage costs are from looting and vandalism that wasn't covered by your insurance company. Not sure why that became a PPP covered expense, but it is. The covered supplier costs, that's an area where we're going to get some more guidance because it applies to supplier arrangements that you had during your covered period, for certain agreements that you had in place prior to the covered period, and then for supplies that were needed for your business during your covered period. So there, I think we're going to need to get a little more guidance on what that means exactly. The 4th area is covered worker protection expenditures. That's things like PPE for your employees, or sneeze guards, or even a drive-through window for your business. Any type of modification you had to make to protect your workers, that's now a qualified expense for PPP loan forgiveness as well. So right now, those 4 categories, we have no FAQs on those. We only have what's in the IFR, which isn't very extensive. The only area they kind of go into greater detail is with the 4th one, the covered worker protection expenditures. So we're kind of hoping to get some FAQs on that. And the reason why I think these 4 are so important, as well as the other non-payroll costs, goes back to my conversation I had last week about the fact that we now want to try to maximize our non-payroll costs in the PPP loan forgiveness so we can minimize the amount of payroll we necessarily have to use for PPP loan forgiveness, such that we can possibly increase our employee retention credit. Now, keep in mind, if you don't qualify for the employee retention credit, it's not even an issue for you. But I know that I had a lot of people who told me that their payroll cost alone was sufficient to give them 100% loan forgiveness, so they didn't even bother providing rental expense information, utility information, or mortgage interest or loan interest information, and certainly didn't provide these 4 new items because they didn't even exist prior to December 27th. But now we're in a situation where maybe we're going to need to do that. So it's going to kind of change up the PPP loan forgiveness process for anybody who qualifies for the employee retention credit. It's going to be a lot of work for people to calculate it, but the employee retention credit calculations I've seen this week are remarkable. We're seeing companies that qualify for hundreds of thousands of dollars of employee retention credit. So don't discount it. You definitely want to explore it if you think you qualify. The other thing here is that the IFR specifically states that these are only available for PPP loans that have not been paid off by the SBA, which means forgiven, prior to December 27th, 2020. So let me revisit that for 1 second, what I just said. Let's say that you put in a PPP loan forgiveness in November and it was forgiven and it's been paid off, and now you want to go back and you want to add some of these 4 categories, these expenses from these 4 categories to that original PPP loan forgiveness application so that you can free up payroll. This IFR is telling me I can't do that. So we'll have to see if we get more guidance on that, but if you can't, we can't. It would be disappointing if somebody needed to do that and couldn't do it, and therefore they lose out maybe on some of their employee retention credit. We'll see. I want to touch upon Schedule C and self-employed people just really briefly here. I've had a lot of questions from self-employed people. If you qualify for PPP Round 2 loan, make sure that you use the Schedule C from 2019 or 2020 that gives you the higher amount of the loan. So for example, if let's say I had a Schedule C person that had a $50,000 net Schedule C for 2019, but a $10,000 net Schedule C for 2020, I would want to use my 2019 Schedule C to get my PPP second draw loan. I know that doesn't make sense, but that's what you're allowed to do. And I've even seen 2 cases this last week where a self-employed person who had income in 2020, but no income in 2019, they actually had a loss, still can qualify for a PPP second draw loan by using their 2019 Schedule C. Keep in mind also that whatever Schedule C you use to obtain your PPP loan, this applies to round 1 or round 2, but it's particularly unique for round 2, that's the Schedule C you use for loan forgiveness. So if you used your 2019 Schedule C to get your PPP round 2 loan, you're going to use your 2019 Schedule C to get your PPP your round 2 loan forgiven, no matter what your 2020 Schedule C looks like. Now, for some of you who do qualify, you might qualify because you had 1 quarter with a 25% or more decline in gross revenue, but maybe your net income for 2020 was higher. The fact is you still qualify. Whether it's right or wrong, I'm not sure, but you still qualify for the PPP second draw loan. So kind of keep that in mind too. It's gotten a little confusing because I've even seen questions from people that said, well, I don't know how I can qualify for loan forgiveness because I technically never paid myself anything. Well, the fact of the matter is for Schedule C borrowers that got a PPP loan for themselves only, they had no other employees, they don't really have to pay themselves anything to begin with. So you're okay as far as that's concerned. Now let's talk for just a minute about what we have to file, what type of applications we have. And we have 3. We have the 3508, which is like the long form, if you will. It covers everything. And then we have the 3508EZ, and that was for businesses that qualified for one of the, essentially one of the exemptions, if you will, for things like your business was subject to a closure order, or you had no reduction in your FTEs or your employee count or anything. So you know, a much simpler application to file. You still provide all the numbers. And then the 3508S, which is going to be by far the form everybody, not everybody, but most everybody will use, because it's for loans that are below or $150,000 or less. Well, the average PPP loan, folks, was like a little over $100,000. So the vast majority of borrowers are going to be able to use the 3508S, which is a simplified form. It'll make things a little bit easier. Now, what's interesting is that the guidance tells us that if your second draw loan is in excess of $150,000, your forgiveness application for the first draw PPP loan must be submitted before or simultaneously with the forgiveness application of the second draw PPP loan. I don't quite understand why they specified that, but because I can't imagine somebody trying to turn in their second draw PPP loan forgiveness before turning in their first draw PPP loan forgiveness, but it's in the rules, so I want to make sure I emphasize it there. Now, we also know by now, hopefully, that the EIDL, the Emergency Injury Disaster Loan Advance, is no longer going to be deducted from the loan forgiveness amount. So it is income to the business. It's tax-free income. It's not taxable in 2020 because it was received in 2020. It does also tell us that any previously deducted EIDL advances that were deducted by the SBA in a loan forgiveness previously is going to be remitted to the lender with interest. So I suppose the lender is then going to send that principal amount back to the borrower. So if you got a PPP loan forgiveness in 2020 and the lender deducted the EIDL from your loan forgiveness amount, and then you had to pay that EIDL balance back to the bank, or maybe you kept it on the loan and you just have the loan now for that amount, that's going to get paid off, or the bank's going to get paid from the SBA and they're going to refund that money to you if you previously paid it off. So if you're subject to that, you might want to reach out to your lender to find out what the timing is on getting paid for that. Emphasize again here on number 4, the loan forgiveness application must be submitted within 10 months of the end of your covered period. Now, the irony to that is you're allowed to pick your covered period. So the SBA and your lender is never going to really know exactly when your due date is for your PPP loan forgiveness. They just know that it can't be anything further than, say, 10 months after 24 weeks after your loan was funded, right? So if your loan was funded in April and your 24-week covered period ended in October, that technically gives you until sometime in August to submit your PPP loan forgiveness for loan number one. So I think it's important to mention here that there really isn't any big rush to get your PPP loan forgiveness for round one turned in. It's just one thing that, one more thing you'll need to get done at some point, but that's the deadline. And there's been a lot of confusion about that still, which I'm hoping we can clarify now. With respect to payroll costs and the loan forgiveness, we did learn that the caps that are applied to employee owner compensation is prorated based on your covered period. Now, we all know that there's a $20,833 cap for owner employees no matter how long you take out the covered period. Once you go past about 10.5 weeks, the cap is $20,833 for an owner employee, or 2.5/12 of their 2019 compensation, no matter what. So if you had somebody that was paid less than $100,000 in compensation in 2019, you're going to have to use that reduced number for your cap. They confirm that C corporation owner employee health benefits can be included in the PPP loan forgiveness under the employee benefits for health insurance, prorated based on caps that were from the base year amounts. But they also confirm that if you're an S corporation owner employee, and that's an S corporation owner that owns 5% or more of the stock in the S corp, their employee health benefits cannot be included because those are supposed to be included in their wages in the first place. So that $20,833 cap is not the same necessarily for a C and an S corporation shareholder owner employee. You got to be careful of that. They did confirm that the owner employee is someone owning 5% or more of the company, which kind of gets a little quirky because with an S corporation, the health insurance is included on your W-2 as wages if you own 2% or more of the stock. So what happens to that small group of people that own between 2% and 5%? I think you technically could still include their health insurance because they're not considered an owner employee for that 5% rule. I don't think, I've seen one or two, I haven't seen very many of those. Also, the other thing about the IFR, and the reason why I put it here is to tie back into that employee retention credit issue, is the fact that the IFR does not say that you must use all eligible wages for PPP loan forgiveness. It would be crazy to say that, because why would you have to produce more dollars in payroll than what the PPP loan requires for 100% loan forgiveness? So again, I'm kind of hanging my hat on that, and we'll have to see what happens in the near term. With respect to non-payroll costs, we still understand that the paid and incurred guidance, which has been previously addressed a lot, is still the guidance we're following. You cannot prepay expenses for non-payroll costs, so you can't pay in advance. You can pay some expenses that were in arrears. And we saw a lot of that last year where businesses were 2, 3, or 4 months behind on their rent. And once they got their PPP loan, they brought their rent back up to being current. All of that rent could be included in the PPP loan forgiveness. So that was kind of interesting. They give us some examples on subleases and where rents might not be able to be counted, or you have to adjust the rental amount. You could, if you've got any circumstance like that, you could look into the IFR to see if it affects you. They confirm that there are limitations on rents paid to related parties. And right here, let me emphasize here, it's really any related party, even if it's partial ownership in the PPP borrower and partial ownership in the rental entity, that's a related party issue. And in those circumstances, the rent amount that you claim for PPP qualified expenses can't exceed the underlying mortgage interest that the related party is paying on the rented property. If there is no interest being paid, you can't count the rent. That's unfortunate. I wish they wouldn't have passed that rule because it just doesn't make sense. It's a double standard for business owners that own their own real estate that they rent from, even if the rent was arm's length, by the way. They talked a little bit about some of the reductions to the loan forgiveness amount, and this is where I just want to emphasize, sometimes these guidance that we get provide us with conflicting information. And here's a good example. Under the section concerning reductions in loan forgiveness, there is a statement that says, in general, a reduction in FTE employees during the covered period reduces the loan forgiveness amount by the same percentage as the percentage in FTE employees. So that tells me that if I have a 20% FTE reduction, I must have a 20% reduction in my loan forgiveness. But it's not the case. At least it shouldn't be the case, and the form certainly doesn't, the application certainly doesn't indicate that. The next paragraph says that the total eligible expenses available for loan forgiveness is reduced proportionately by the percentage reduction in FTE employees. And I think that's really important. Let's say that you have a 20% reduction in your FTE count, and that turns into what they would call an 80% FTE reduction quotient. That's the terminology. And you had $100,000 of qualified PPP expenses, you would only be able to use 80% of those expenses to get your PPP loan forgiveness. Now, if your PPP loan was $75,000, the $80,000 is more than the 75, and you still get 100% of the $75,000 forgiven. So the FTE reduction really wasn't a reduction to the loan forgiveness amount, it was a reduction to the eligible expenses that you can use for loan forgiveness. And in most cases that I've seen, even with FTE reductions, a lot of businesses are still getting 100% of their loan forgiven because of the extended covered period we ended up getting from this. In this particular case, they also confirmed, in section of the IFR, they also confirmed all the various exceptions to the FTE reductions. All of those are listed in my Excel workbook on the Schedule A worksheets, and so they're there. We've still answered a lot of questions from people on that, and I'm always willing to answer questions, but we've talked about those a lot of times, and if you have a question, certainly let me know. Here is where there was a minor change in the reduction to the loan forgiveness amount when it comes to looking at the salary and wage rate reduction. If it was reduced by more than 25%, now you look at the full quarter of employment before the covered period to determine if you did a 25% or more wage rate or salary reduction. So let's say for PPP round 2, if you get the loan, say on January 31st of 2021 for your PPP round 2, then you would compare your payroll during your covered period, your pay rate during your covered period, to the pay rates of those employees that you paid in the fourth quarter of 2020, just to make sure you didn't reduce anybody's pay rate by more than 25%. Now, if you reduce their hours but didn't reduce their rate, that will affect your FTE calcs, but it won't affect your wage rate or pay rate reduction. And I want to emphasize that. And in my experience in reviewing PPP loan forgiveness calculations, I've probably had 1 or 2, maybe 3 companies that had any significant adjustment with respect to this pay rate reduction. We've spent a lot of time on it, but I don't think it applies to a lot of people. Documentation requirements. This is the one area where I'm still getting a lot of conflicting questions and confusion from people. We all know that if your loan is $150,000 or less, you're going to use a 3508S to file for your forgiveness application. It does ask you for your payroll costs that you incurred, and then it asks you for how much loan forgiveness you're asking for. And then you provide essentially no other documentation or calculations. You just certify that you met the loan forgiveness requirements. Now, it does say in the IFR that you must maintain the documentation to support your loan forgiveness, and you must make that documentation available upon request. So if you don't meet 100% loan forgiveness and your loan's 150 or less, be careful filling out the 3508S because you could end up getting in trouble. So your best bet is to do the calculation, make sure you've properly used the money, and then you get full forgiveness, and just keep all that documentation for the requested 6-year period they're telling you to. For PPP loans that are more than $150,000, you must still provide all of the documentation. Nothing's changed as far as that's concerned. The instructions to Form 3508S provide really good examples. It's a little confusing when it gets to how to provide information regarding your FTEs and such, but look at that. Look at the instructions, and you'll get the documentation from there. I will point out here that with the lenders we've worked with, we do get conflicting requests for documentation. Some lenders ask for things that other lenders do not ask for. I believe that's simply an internal system that each lender has kind of set up, where some lenders might accept a payroll summary from QuickBooks and don't require that, say, the tax form or an unemployment tax form, and then another lender will absolutely want the tax forms. So you just have to kind of go along with what your lender requests. That's going to wrap up this week's PPP tune-up. Like I said, please continue to send questions to us. We'll get to them as quickly as we can, and we will come to you again next week. If you've got some suggestions on information you'd like to learn more about that we can certainly provide, we'd be happy to do so. Otherwise, I wish everybody a great weekend and a great week next week. Take care.